Life Management Science Labs would like to acknowledge that we live and produce this podcast on the traditional lands of the Wurundjeri people. We'd also like to acknowledge the traditional owners of the lands of our listeners and our international colleagues. We'd like to pay our respects to their elders past, present, and emerging. Hello everyone, and welcome to Wealth Pathways, the Affluence Science Insights Podcast produced by LMSL, the Life Management Science Labs. We are champions of life management science, providing structured insights informed by science and inspired by practice on key aspects of conscious living. Each week, we bring you scientific and practical insights on each element with the expert knowledge of professionals in the field. I'm your host, Marie Stella, coming to your ears from Naarm, Melbourne, Australia. Let's learn together. Greetings, our most esteemed listeners, and welcome to the very first episode of Wealth Pathways, the Affluence Science Insights Podcast. Financial literacy is quite a massive struggle for many people through adulthood. It's not quite taught in schools, and so many of us are left to figure it all out for ourselves, and that's exactly what we'll be doing on this podcast. For those fortunate enough to be financially prosperous early on in adulthood, the question of how to manage it still remains. So we'll be exploring this on our first episode, where we'll examine a pretty popular approach to investing that can be very tempting with its promise of quick profits, which is day trading. Now, we're looking at what exactly makes it work, what is needed to make it work, the advantages, the risks, considerations, and how it all holds up in the grand scheme of wealth management. Is it worth pursuing at all? What alternatives are there? We'll be answering all these questions and more with the guidance of finance lecturer, Dr. Jason Tian from Swinburne University. So, hello, Jason. Welcome to the show.
Thanks very much for the invite. Yeah, really glad to be here.
Yeah, thank you so much for spending your time with us today. Now, before we begin, could you give us a brief summary of what day trading is for those who aren't aware?
Okay, so I think day trading, as the name suggests, is actually pretty self-explanatory. You pretty much just trade for the day, right? So you pretty much treat it as your job, pretty much. You just sit down, in front of your computer. And then when the market starts, you just start trading. And at the end of the day, or when the market closes, you will try to close your positions fully. So whether that's sort of in profit or in loss. So that's pretty much what day trading is, right? But sometimes when people talk about day trading, I think they might actually hold the position overnight if they think that's a good way to do so. But normally when people talk about day trading, I think it's trading for a day or it's just trading for really, really short period of time. That's compared to things like, some people might heard about things like a swing trading. That's, people hold positions or trading, pretty much just hold the stocks or whatever they're trading positions for a bit longer, a couple of weeks or month, as well as other sort of things people have heard about, buy and hold or things like set and forget, which is that much longer term sort of investor that you just keep putting money in and then just let the money to grow or let the investment to grow. So I think that's pretty much what day trading is. Yeah.
Yeah, thank you for that. I am really keen to go further into detail about, what this this form of trading means, what kind of considerations must be made when we're trying to approach trading from this angle, and all of the disadvantages that come with that. But before we do that, I would love if we could get to know you a bit better, if that's all right.
Yeah, no, definitely. Really happy to, introduce myself. Yeah.
Yeah, this is Have You Met Jason? My first question for you is, what do you like to do in your spare time?
Yeah, so I'm a senior lecturer at Swinburne University, as you introduced to the audience. So, as I often joked about, as an academic in finance, your work is pretty much 24/7. So you don't really have a spare time because your spare time is pretty much just doing research apart from teaching. But for me, if I do actually get a bit of spare time, then I like to do a bit of reading. And also I like to do actually just putting together Lego as well, just to calm myself down or just to let myself actually have a bit of brain rest. So yeah, that's pretty much what I do. And of course, I watch TV shows and movies. Yeah, just like a regular boring university lecturers do. Yeah.
Yeah, well, what sparked your interest in finance?
I think it's a bit of like a family thing. So my parents actually worked in a bank. So I kind of, grew up in a family where my parents are kind of, in that sort of field, and sort of, you just get to know a bit more about banking and finance. So it's sort of like, following a bit like a family steps, but also I sort of grow into finance when I started sort of, learning about finance, and then actually get to know more. And when you read more, and then you get into the field, even more. So especially nowadays, I think with a lot of technologies and, YouTube videos and the podcasts you guys are producing, you get to know, more and more sort of, about finance, day trading, and all the other ways that people actually make money. So, I mean, who would have say no about, making money, right? That's all of, that's all finance is all about, right? So yeah. So that's, I think, how I got into this. Yeah.
Yeah, well, that's really nice to be able to follow in your parents' footsteps. I can't say the same about myself, but you did mention that you enjoy watching movies and TV shows. Are there any that you've enjoyed recently, or any that you'd say are your favorite?
Yeah, so I really want to come up with some TV shows that's kind of a bit philosophical to show that I'm actually a thinker or something that really enjoyed this type of thing, but I couldn't. Like, I feel like I just fall into this very popcorn type of movies, like, Fast and Furious, and, this type of thing that sort of, I can just sit there and not thinking anything, and then just enjoy sort of, all the visual and thrills from that. So yeah, so that's the type of movies I like, and I really actually like Fast and Furious for some reason. Maybe I like cars quite a lot. Yeah. In terms of TV shows, I actually really enjoyed one of the Australian TV show called Rush. I'm not sure if people actually heard about it.
I
It's
haven't heard of it.
okay. Yeah, it's actually I think a lot of scenes are shot at Melbourne. Actually, they're basically about this a police public response team actually responding to different incidents in Melbourne. So yeah, it's called
Oh,
Rush. It's an Australian TV show. Yeah,
okay. I might have to check that one out. I love police TV shows. But also I feel like there's validity in just having your entertainment be entertainment and not
that's right.
anything more than that. You know,
Yeah,
especially for people who work very um demanding jobs that require a lot of on just always on 24/7 thinking. Sometimes just switching your brain off and having entertainment be entertainment is what you need. So that's so fair. Um, yeah, well, apart from that, you mentioned that you enjoy reading as well. So what kind of books do you enjoy leaning into?
yeah. So I actually put the two books behind me just for the decoration purposes, but also to answer that particular question. Yeah, I actually really enjoy the book called Thinking Fast and Slow. I think from the Nobel Prize laureate, like a Daniel Kahneman. So, and then I think there's a follow-up book called Noise, as I put next to it. So they're actually really relevant to today's topic as well. And that's actually how I got into this field as well. I wrote a lot of academic paper, not a lot, but a couple of academic papers on retail investor trading. And there are actually a few more doing that with another co-authors. So yeah, and I think these books are actually really providing that sort of exploration and really looking at individual investor behaviors and trading, and that's why sort of I can share some lights on today's topic about day trading as well. Yeah, because I think a lot of
Right.
individual investors are doing day trading, right? I don't think that a lot of institutional investors will actually call
Yeah.
these day trading because that's pretty much their job, or yeah. So
Yeah. Okay. So if you had to say what's the best thing about these books in one line, what would you say?
it's really just telling you, like, as a human being, we are subject, when we make decisions, we're actually subject to a lot of biases and things that we actually aren't aware of. And that actually feeds into your trading decisions. So that's something, we need to be aware of.
Yeah, okay, that's really interesting. I feel like we got to know you a bit better, so thank you for sharing all of that with us. Now let's move on to the interview. And I want to start with the basics. Would you be able to define what affluence and wealth management means to you?
Yeah, sure. So I think when people actually sort of, see the word affluence, they almost sort of associate that with sort of, people being rich or something like that. But I think, affluence isn't just about having a lot of money, right? Because, we have like a more than 6, billion people in the world. It's not like everyone's going to be rich. But I think, everyone can be affluent because it's all about, feeling financially secure, right? Enjoying a good life, being able to pursue your goals without actually worrying too much about, money or, worried too much about, things financially. So that's how I see sort of affluence, right? So for me personally, I think, I'm not like a super rich. I'm just a university lecturer, but I feel like, to some extent, I feel like I'm affluent enough to sort of, manage my wealth well, to not to worry about it constantly, so that I can also pursue my own interests and goals. So that also depends on how you sort of, do budgeting, managing your personal wealth, and being aware of some pitfalls in sort of, trading and also other sort of financial decisions. Yeah.
Yeah, and what about wealth management? What does that mean?
Yeah, so wealth management, like a lot of people like suddenly would just think, oh, I need to get a financial advisor, right, to give me that financial advice so that I can manage my wealth. But I think a lot of simple things you could also do yourself, and then that's what wealth management is all about. For me personally, I think wealth management is about knowing, how to manage yourself and actually being that sort of, knowing sort of, all the key financial concepts, or actually able to just learn the basics about finance. We're not talking about, some really hard sort of financial concept, but really just knowing day-to-day things like, how much actually I spend it today, and are there anything unnecessary? Could I actually cut back unnecessary things? Or I can, save that bid for tomorrow, or I can actually use that money to grow into the future, right? So I think wealth management is not something really that big, although we can, make it really big, but it's also about starting small, starting from your day-to-day sort of businesses, and, just grow your money slowly on a daily basis. Yeah.
So, what do you think are some common misconceptions about wealth management, and how do they affect our understanding of wealth and success?
Yeah, so I think common misunderstanding about wealth management is that it's only for sort of, rich people, right? So, if I don't have a lot of money, I don't have to do any wealth management.
Mhm.
As I mentioned before, I think, managing wealth, it's about making you feel like you are under control for your own finance, right? So a lot of times, you will hear people like, oh, I spent so much money on this, and I feel like, I don't have a lot of spare savings and all that. And that's very common, right? If you look at statistics in Australia, a lot of people don't have a lot of money in their bank. That's because they tend to just spend a lot, but
Mhm.
without really thinking about whether I actually should spend a lot of that money, right? For example, spending on coffee, right? That can actually, be wealth destruction if you actually spend a lot of money on coffee every day. And I think a lot of people talked about that. Whereas if you actually think about this and trying to, cut back a few coffees or trying to find alternative ways, then that could actually also be building up your wealth on a daily basis. And actually a couple of years down the track, you will actually see the sort of, the difference, right? Because it's not about the money you spend and save. It's also the opportunity cost you actually foregone of saving that, coffee money and maybe invest it in somewhere else, right? So
Yeah.
that's sort of, the wealth management we're talking about. It's about sort of, thinking about the little things you can change and do, rather than just think, oh, it's something big, I should just delegate it to financial advisors. Well, you are in control of your own wealth, and even though financial advisors are supposed to do the best thing for you, but they don't know you well, or as well as you are yourself. So yeah, so you
Yeah.
really need to get control of your own wealth.
Yeah. And I think the more important bit there is making sure that whatever money that you do save on cutting back a few coffees is put into savings or some kind of investment rather than being spent on a little other treat. Because I think that's like that's a very pitfall mindset kind of thing that a lot of people do end up in, and I admittedly have been in before, being like, oh, good job me, I've cut back on a few coffees, let me buy myself a treat now, which is completely eradicating my
Yeah, that's right.
efforts.
That's right. We can do a little thought experiment, right? That's what I talk to my friends about. It's like, because, some of my friends also like to buy lottery tickets as well, right? So, that's something I would call, same as buying coffee and not really getting, oh, well, when you buy a coffee, you do get that sort of period that you really get, excited about. But, if you think about it, if you save, a couple of coffee money per day, or if every week you don't spend that money to buy a lottery ticket, and let's actually put doing some thought experiment. What if, in the past 5 years, you have been putting that money into cryptocurrency? Now, I know this is controversial, but, if you just think about that for a bit, right? I mean, if you treat putting money into cryptocurrency as a waste of the money, the same as buying lottery tickets, but if you do actually see the big differences if you just put every maybe $20 per week into Bitcoin, let's say, over the past 5 years versus just buying, $20 worth of lottery tickets every week in the past, 5 years, you will see a big difference, right?
Yeah.
So that's sort of what I'm talking about when it comes to wealth management, also being sort of, open-minded and also think about what are the available financial instruments out there that I can actually use a small amount of money to actually build up my wealth as well.
Yeah, and there's so many various routes of investing that one could explore. But today we're discussing specifically about day trading, which has been very, like I said before, very tempting to many individuals because of how promising it looks. But how would you describe day trading as a form of wealth management? Just very briefly.
Yeah, so now I think day trading is a little bit like a playing video game in a way nowadays, like to me at least, because it kind of, similar, like, you sit there for a day and you just playing the game called, buy and sell, right? So then you look at different sort of, stocks, or I think a lot of times, nowadays when people talk about day trading, they're actually trading cryptocurrencies as well, because, that liquidity and it's just easy to buy and sell as well. And, cryptocurrencies are sort of volatile enough for you to have that sort of upside and downside to profit from when you trade on a daily basis. Whereas I think when it comes to day trading for stocks, a lot of stocks don't probably have that enough liquidity or volatility in particular for you to make enough money on a day-to-day basis, right? So then when people do day trading on stocks, in particular in Australian market where sort of I probably have a bit more expertise, they tend to trade like small stocks and, mining stocks or other small technology stocks that actually are very, very volatile, right? So I think that's what they are trying to use to build the wealth, because they think they actually get a large profits from doing day trading. To some extent, that's similar, like, buying a lottery ticket. So I think two other co-authors and I have done a bit of research on this as well, is like, a lot of times when it comes to day trading, for a lot of people trying to make wealth out of this, they kind of treat it like actually lottery-like sort of, business, basically, because they are looking for big returns over a really short period of time, right? And there are, I think, we can talk about the upsides and downside of day trading. Obviously, for the upside, if you could consistently making big profits on a daily basis, then you could really quickly build up your wealth, right? But I think the downside then is also very obvious, is that it's incredibly stressful and in a way time consuming. Yeah, because you have to sit there every day and watching your position and watching the monies going up and down. So that's extremely stressful when you think about it. And, you have to be sure that you're actually going to, beating the market or actually making money more than 50% chance of the day, because otherwise on average you're losing money. So again, it's a stressful. There are a lot of upside, but it's a very stressful, and then you actually need to be able to, be rational in a way, being rational, not fully rational, but rational in a way that you actually know when to stop as well. It's like playing video game. It's actually addictive. So you need to know when to stop and when to actually just step aside and think about whether I'm actually, doing enough already for the day. Yeah.
Right. So it sounds like there are many things to consider when it comes to day trading, and it is not for everyone in essence. So, what type of people would you recommend day trading for?
Yeah. So I think if you actually have a day job, I wouldn't actually recommend you actually do day trading. As I mentioned, day trading would require a lot of time to just, be mindful about your position, right? So that's kind of really mind bothering in a way. I imagine if you are actually, working a job that you actually can't really keep an eye on your position, then that's probably something not for you. Whereas I think what the day trading could be good for is if you actually have that ample time to be able to just dedicate it to looking after your positions and able to actually make a good life out of it. Yeah, I'm not sure that's actually a good news, because at the end of the day, for me, I would say that, day trading is actually a very risky business. I wouldn't for me, I wouldn't recommend it to everyone, because it's actually not suitable for everyone. It's a stressful thing. And we can talk about the behavioral and the psychological impact it might have, which ultimately makes it probably not a good choice for a lot of people. But if you actually have a lot of free time and you are actually very risk seeking, and you do have, you feel like you have a lot of free money that you want to test the water, then yeah, day trading is probably the way you can actually think about to build your wealth or to gain experience from the financial market as well. Yeah.
Yeah, a couple of things there that you said that intrigued me. Firstly, that day trading is very similar to lottery experience. And the second thing is about the psychological factors. Now, what I wanted to touch on with this is how the market dynamics and volatility affect day trading activities. Could you explain to us some of the link there?
Yeah, so I think obviously if you want to day trade, right, so you will be looking for instruments that have enough volatility that could actually make the profit or make the expected profit you want to make, right? You wouldn't, let's say, to bet on or to actually trade an index fund on a day just to make that sort of probably 0.% movement or even less, right? So I think for a lot of day traders or people who want to do day trading, they will definitely be looking for instruments that are volatile enough for them to actually make that expected profit they are looking for. So that's sort of the rationale behind it. And that ultimately then links to the things I discussed, is that volatility then plays into your psychology, basically, because when you see your money's going up and down, or when you see, suddenly you had, probably made $10,000 in this hour, but then next hour, because some news or something else, then it drops, and then sort of, you are in negative territory. And then that psychological sort of roller coaster is actually going to push you to make some bad decisions as well. And that's actually why I sort of mentioned that two books is at the beginning, is that, as a human being, a lot of times we have that psychological biases and, which actually affects our judgment. And that judgment is actually going to be significantly affected by the stock market volatility and affecting your decision making. Now, that's not saying day trading is bad, right? I think for me, day trading is more like a stage in your investment life, right? So obviously when you're young and when you're sort of, just new to the stock market, I think day trading is also a good way to build up your financial knowledge, to know how the market's like, and you get to know a lot of different financial instruments, as well as getting a feel of how the market's, moving and what actually affects the market movement. So I think putting the money aside, I think day trading also gives you a lot of knowledge as well as experience about the financial market, which will actually help your financial success later down the track as well. I think if you actually do it correctly rather than just treating like day trading as some sort of gambling, right? So that's a very easy thing to do for a lot of investors, is that they treat sort of, trading as an alternative way to gambling. And, that's one of the academic papers we did back in looking at during COVID, when things were locked down, when the sort of, casinos were locked down or other gambling approach was actually banned. Then, a lot of people actually go to doing stock trading because they treat that as an alternative to gambling, basically.
Yeah, for sure. And there are quite a few alternatives to day trading as well that may pose less risks, but they may also come with different advantages. But for starters, let's talk about the S&P 500. There is a technique that I've heard of where you simply invest in the S&P 500. Now, for our listeners who aren't aware of what this is, could you explain what that means?
Yeah, so S&P 500, right? It's called Standard Poor 500 Index. So it's basically an index that tracks the biggest 500 stocks in the US market. So that includes, the well-known names like Apple, Google, Nvidia, and Tesla, right? So they are all part of the S&P 500 index. So it's actually the broadest, or not the broadest, but it's actually one of the broader index that captures the best quality stocks, I would say, in the world as well, right? Even though it's a sort of a US index, but it does actually capture the best 500 stocks you can select. And the good thing about this 500 index is that the composition of the index actually changes, right? It's not like, the companies will stay there forever. Like, if you look actually S&P 500 index sort of, 20 years ago as compared to, or actually probably a bit longer, like, 30 years ago or something, as compared to the composition of the index today, like 30 years ago, you wouldn't see names like Tesla, Nvidia, and other well-known names nowadays, right? Whereas nowadays, you will see that mostly the big technology companies actually taking the first or second spots in the S&P 500. So that natural sort of, filtering and kicking out the companies actually not going to do so well, right? Because, it's based on the size of the company. So then naturally, if you're doing well, then, the good company is going to get into the index, whereas the bad one's going to be filtered out. So then when you invest in S&P 500, you are naturally just always investing in the good companies, the best 500 companies. Yeah, so that's what S&P 500 index is all about.
Yeah. So what are the disadvantages of this approach to trading?
Yeah, obviously, I guess let's start with the, downside. The downside is really slow, right? It's like driving a slow car that sort of, there's not much excitement, right? So, you're not going to, get to your destination in a few seconds, right? It takes time for the index to grow on a day-to-day basis, and it's also subject to volatilities and market news, so it might go down as well, but it will normally quickly go back up again. All right, so if we have seen the history, so that's the downside. That's sort of as compared to day trading as well, because you're not going to day trade S&P 500, but there is actually catch we can talk about later. You can actually day trade S&P 500 if you actually were willing to take leverage and trading this, what we call leverage ETF as well. They actually offer you quite, big volatility swing as well based on S&P 500. But, in general, I think as compared to some sort of day trading instruments, like even we just look at Tesla or Nvidia in the US, right? Their volatility is much higher as compared to the S&P 500 index. So you're not going to actually make a lot of money just in a day, right? Unless you have a big pool of capital already, like Warren Buffett. Obviously, if you invest $1 billion and if the market moves 0.5%, you still get a lot of money. But for a lot of other, for a lot of us, like, as a regular investor, you don't really have that much of money to actually to grow your wealth. So that's why a lot of people, I think, looking at day trading, because their capital base is much smaller. So they are looking for that big percentage return so that they can get a big dollar return as well.
Right.
So on the upside, I think then that's the security. I think, I don't need to spend too much more on this, but it's about that security and I guess, the quality of your investment, right? Because you don't have to worry about, do these companies I invest, will they actually go bankrupt? Or, for example, when you invest in individual stock, right, to day trade, right, you build your position in a day, you might have to cut losses because, you're losing it, you're losing the money. But if you actually, for a lot of individual investors, once they start losing money, they will just hold on to their positions, right? That's their psychological, biases, which we call loss aversion, right? And then they just keep holding their losing positions because they want that to come back. But because you're holding one individual stock, right, you are actually having a lot of, individual firm risks, which the company might just go bankrupt and your money is just gone, right? Whereas when you invest in S&P 500, you never need to worry about it. Maybe during volatile or bear market, you are making losses. But if you trust US economy or in general, right, then, you shouldn't worry too much about your investment in S&P 500, right? Because if S&P 500 is actually, keep dropping and making losses, then I guess, the US economy is probably going to be gone, right? So
yeah.
I think that's why, as I keep telling people, like buying S&P 500 is like, buying US, right? If you trust US is going to make money and continue to exist, then, S&P 500 is probably quite, safe investment.
Yeah. And what other approaches to trading are there that are viable for individual wealth management?
Yeah, so if we're not talking about day trading, but just thinking about sort of, other ways of people can build wealth, then I think definitely, I think for younger, for young people as well, I mean, including myself, I would say I'm still very young. I think, really looking at your superannuation as well. Like, I think that's a good way to think about building your wealth because, it's building wealth is not just about building the wealth for the next couple of years or next couple of months, right? It's about your retirement as well, right? You really need to think about your own life cycle as well. So then it's about sort of sometimes putting aside a little bit of money on your superannuation. Although I know the employer is actually sort of making that compulsory contribution to your superannuation. But once you actually build up your career and then you start your family and you actually build into the property portfolio, which is another way I will come back on building the wealth, which is about property, buying a property or something like that. When you actually make contribution to your superannuation and use it wisely as a tax effective sort of tool, then once you actually get to that stage, it's actually really going to help your wealth building, right? Because it's it's all about saving tax as well, like so think about that as well. And for I think another way, as I mentioned, is actually also buying a property is a good way to sort of as an alternative or wealth building, right? So although I understand, like for a lot of people saying, oh, you make it sound so easy, buying a property seems to be the largest sort of decision. But sometimes I think, it's about sort of pushing yourself a little bit and, again, right, it's about saving the cost, that you could save when you're young, and also actually finding ways to sort of, get into the property market later and then use that property market instrument, because if you think about your property is also a sort of financial instrument you can leverage it on, right? So then you can use that instrument to continue to build your wealth as well. And property is also a false saving in a way, like what a lot of people say, that it forces you to save. So that also gives you a bit of self-discipline. Yeah. So again, right, this is not sort of suitable for everyone. I understand everyone's different, but we're just sort of, talking about some ways that we could actually, do sort of, wealth building alongside of day trading, obviously. Yeah.
And by and large, how would you recommend one going about assessing risk with all of these different forms or like avenues for wealth management?
So I think assessing risk is firstly understand sort of your own personal risk preferences. I think, do you prefer more risk or are you actually very risk averse, right? So, I mean, if you're very risk averse, then currently, I guess for a lot of people, you probably don't need to trade or day trade because, that's actually a very risky thing to do, right? And at the moment, you could just simply put your money in the bank. You're actually making pretty good sort of return from the risk-free rate, right? But if you're actually quite risk-seeking and then you feel like, oh, I'm still very young and I want to actually take that sort of leap to sort of, take a bit higher risk and then grow my capital, then obviously, day trading is a good way to test out the water and then you might actually start to build your, wealth from there. And then when you do day trading, obviously you have to keep up with the news as well as other sort of, source of information to make sure you understand what are the current risk environment, what are the current key themes from macroeconomic perspective that would actually affect your sort of, day trading. So I think, keeping up with the news, talking to people. And I think nowadays a lot of tools actually make it easier. Like, you can follow Twitter because Twitter is pretty, prompt in terms of news. And also we have a lot of other tools available as well, like YouTube videos. You can learn a lot from other people who are sharing about day trading experience, and they're also making day-to-day market commentary as well. So you can actually learn how others are actually sort of analyzing the market and then get a sense of how everyone else is thinking about the market. So I think that's a lot of people do when they day trade, right? They watch YouTube videos because there are some big, influencers. They kind of, talk about day trading and their opinions about sort of, the stock market, and just reflect on that, right? You don't have to believe on them, but, you can reflect on their opinions and just form your own opinions. And then, there are a lot of other news sources you can get. Unfortunately, I think for a lot of individual investors, it's probably too expensive to get a Bloomberg terminal. But I think if some people, when they are really serious about day trading, they do actually have a proper setup at home where they get a Bloomberg terminal where they can access to real life data as well as real life news and, other sort of information they could get as well, right? To form what we call sort of informed decisions about trading rather than just listen to news or listen to other people's opinions. So a lot of people, when they do day trading, they can be very serious. They are trying to sort of, make the so-called right decision based on the information they can get from, information sources like Bloomberg terminals and other terminals.
Yeah, that's really interesting. Well, thank you so much for sharing all of that, Jason. Now let's move on to the practices and habits section. For starters, what are some activities, practices, or habits that you recommend engaging in when it comes to building or managing our wealth?
Yeah. So actually, there's a little thing like a lot of people can do, and that's actually a little thing I have been doing. And I was actually looking at it yesterday, and I can't believe I actually have been doing that for the past, I guess, 14 years already, which is actually just record your daily expenses and income every day. So I was a bit surprised I've been doing that for the past 14 years when using Excel, and then just record how much I spend on the day, what items I actually spend it, and just record my incomes as well. So then every month I also reconcile like, all the expenses and income. And every year also, this is sort of me being a bit like a, what's the word, geeky, which is sort of, doing charts and looking at my sort of, expense patterns and income patterns. And I think that's something like people can always do themselves, is that just be conscious about your spending and income, right? Because it's easy to say that, I should just be conscious about that. But, when it comes to implementation, I think the best way is maybe not on a day-to-day basis, but at least every week, sit down, look at all your expenses and all your income and actually put them into Excel spreadsheet,
Yeah.
because that actually forces you to think about it, right?
Yeah.
Yep.
Yeah, I agree. I personally don't do it yet. So this is something that I have wanted to do, but I just haven't gotten around to it. But I will say that, like, I think a lot of people's mindset is like, oh, that sounds like it will make my week to week or day to day life so difficult. Like, I'll have to sit down. Sounds like so much work. But that's kind of the point. The point there is to force yourself to think about what you're buying so that you're not mindlessly purchasing. It's kind of almost a deterrent, and at the same time it is a visual representation at the end. Once you've collected all of the data, it's a visual representation of what you've been spending your money on. So I
That's right.
yeah.
That's right. I really enjoyed it myself now, like because after you have done that for 10 years, right? Another thing I was, again, being very geeky and nerdy, it's like when you look at the past 10 or 14 years for me now, since 2010, I started doing it. And then actually when I look at my expenses pattern and income pattern, I do actually see myself and reflect how I have actually sort of come, I guess, a long way from, being a student, and how now I sort of, being the opposite side of a student. So I think that also gives you opportunity to reflect on yourself as well. Like, and that also sort of, I think we talked about this thing, like being in control of your finance, right? I think doing this also gives you a sense of being in control of your finance. I think that's when people say I lose control of my finance, I think a lot of times they're actually not really doing their finance, right? Doing your finance can be as simple as just putting down your expenses and income and look at your balance sheet or income statement. And that gives you a sense of, control as well.
Yeah. So how much time do you say you allocate to it on a week to week basis?
It's not much actually for me, because I sort of, develop my own system, and I sort of, I improve my sort of approach as well. Like when I look at my spreadsheet, actually from like really kind of shitty sort of Excel to now sort of a bit more like advanced. And then you can actually find template from Excel or Google Sheet as well to help you to do that. So I think I probably spend like half an hour probably every week, right? It depends on, are there more spending you need to put it in, or are there less, right? So so that actually determines your time spent on this. Yeah.
Yeah. And how do you think this practice would affect one's affluence or perception of life?
Yeah, so again, as I mentioned, it gives you a sense of control because you know what you're spending on, and you sort of, know your income as well, right? So you know your balance sheet, you know financially, right? You kind of just acting like an accountant and auditor on yourself. And that also means that you actually auditing your own expenses and think about whether this is necessary or not. I think sometimes it's easy just to spend the money, and because nowadays it's all tap and go, right? So you don't even see the money going out. So it's actually really easy to lose a sense of how much money I'm actually spending, especially, if you go to cafe a lot, dine out a lot, right? That adds up really quickly. And whereas you put it down, then you actually think, oh, this is actually a lot of money. So maybe I should actually cut down a bit there. Or when I look at it, I can think about, oh, do I actually need to spend this money? So that gives you a foresight, or, a kind of simple data analytics you could do yourself to help yourself to,
Yeah.
yeah.
That's really good advice. Thank you so much for sharing all of your expertise with us, Jason. Really, really appreciate it. Now let's move on to the open mic section. This is your chance to talk about anything that you're passionate about, and doesn't have to be related to the topic. So the floor is entirely yours. Take it away.
Okay, cool. So yeah. So as I mentioned before, like I'm actually really, I'm a Lego fan, right? I'm not sure. Like I always use the excuse to buy Legos for my son, but I'm not sure whether I'm just buying that for myself or actually I'm just using my son as an excuse, right? So yeah. So I think as a side way, as a different sort of way to sort of interpret sort of or to talk about day trading. I know we talked about day trading and how to build wealth, like maybe talking about Lego is not interesting, but I know everyone, not everyone, but I know a lot of people probably heard about Lego investing, right? I'm not saying Lego investing is good or making any recommendations, but that's just I'm trying to use Lego as an example that in real life, actually a lot of things, if you think about it, would actually have a financial aspect to it, right?
Mm-hmm.
And that's you being sort of having that sort of financial sense to it. And that's, I think, when I teach my students about investment and things, like I always tell them to keep it open-minded, right? So don't just think like investment or trading is all about stocks and cryptocurrency, right? There's a lot of other things that actually have that sort of financial aspect to it. And I talk to a lot of people, like a lot of people actually using Lego as an investment, right? So they actually buy all these retired sets, or they buy sets and let it sit there for a couple of years and wait for the price to increase. Obviously, it's not always making money, and when more people are doing it, then obviously it's probably the profit margin is going to go down. But that's the natural of competitive market, right? But again, I'm just using this as example to show, or to actually to talk about, there are so many other alternative investment vehicles out there you could keep open-minded for, that could actually also help to build your wealth as well. Yeah.
That's really interesting. It kind of reminds me of toy collectors and they're
right.
like Funko Pops, where they just kind of sit in the box and people wait for the value of it to appreciate. Is that similar at all, or?
That's right. It's pretty much just like, this is what we call collectibles, right? Collectible investments, right? Now, there's a report, I forgot which company that does it, but it's probably from this company called Frank Knight. It's like a property, not property company, but it's probably a company that sort of, does wealth management for a lot of so-called wealthy individuals, right? And if you look at their sort of asset allocation and composition, you will see that actually for a lot of wealthy individuals, they kind of not really just focusing on just traditional investment like equity and bonds. And they also keep a lot of wealth in what we call collectibles as well. So that's really, the diversification they're looking for, I guess. That's why I think when you are young, you're probably not thinking about that diversification or asset allocation. But when you're gradually building up your wealth, you might actually think about diversification and other alternative investment you could actually make. But my point for a lot of people who are doing day trading, who are probably mostly a younger sort of cohort, is that, keep your mind open and think about when you look at something, right, don't just think about it from a consumption perspective. You also could think about from an investment perspective as well. So, when you look at, I think there's an example about like, what else, like Lego and expensive, like, handbags, and also other things that people collect, right? Coins and stamps and things. Again, you might not do it, but it's about actually having a sense of, a lot of things have investment values. And that's actually the theme you mentioned at the beginning, is about the financial literacy, right? It's about actually having a sense of finance and actually, being eager to actually use different ways to actually make money. So, yeah.
Yeah. You know what? This is music to my ears, because I found some pre-World War II coins just a few months ago that are from Singapore. And I also found a 1940s Australian coin. I think it was a penny or something, like, I don't know what it's called, but it was a really old coin. And I have just been begging my partner to let me keep it, because I think it's cool, and the value is going to appreciate over time. So now I can say it's a collectible investment.
Yeah. Well, collectible investment, that's the terminology. Yeah. So that's sort of, the things I probably could just, offer at the end to this session that hopefully sort of, fits into sort of, the theme today.
Yeah, that's really interesting. I love what we ended on. I feel like it was such a cool and interesting twist. So thank you for sharing that. And thank you for lending your time and wisdom to us today. If our listeners want to find out more about you and what you do, where can they go?
Yeah, well, it's very easy. I think nowadays Swinburne has this really fancy web page. If you just put in my name, Jason Tian, put Swinburne, because I'm not sure how many Jason Tians out there. And then they can probably just find me, find my profile page. And I also got a LinkedIn page as well. You feel free to send me a message. Yeah.
Amazing. We'll link those in the show notes. Thank you everyone for tuning in. We hope you learned a bit about day trading and collectible investments, wealth management, all that good stuff. And we'll see you in the next episode.
Thank you.
You've been listening to Wealth Pathways, the Affluence Science Insights Podcast produced by LMSL, the Life Management Science Labs. More episodes are available from 10 life management perspectives and can be found by searching LMSL on Apple Podcasts, Google Podcasts, Spotify, YouTube, and other podcasting apps available on your devices. If you enjoyed this episode, please rate, share, and subscribe to our channel so that other people can find it and we can continue to provide quality content. More of our work can be found on our website at affluence.lifemanagementsciencelabs.com, where you can join our movement. I'm Marie Stella. Thanks for tuning in.